Today we'll show you how to trade candle range theory on US indexes. You will learn two simple strategies for day trading US30, US100 and US500 indexes with CRT. And as a bonus, I will show you a real trade on US30 that I just entered. Always remember that the core element of successful candle range theory trading is the identification of a proper candle. You may use various entry strategies for trading candle range theory, but there are some important rules to follow for the identification of a proper candle. So first, let me share with you the characteristics of a perfect candlestick for trading candle range theory, and then I will explain two different ways to trade that. We are on US30 Index on a 4-hour time frame, and here I see an ideal candle for CRT trading. It should strictly be an imbalance candle, a strong bearish or bullish candle with a large body and relatively small wicks. In our case, we have a strong high momentum bearish candle. We consider this candle to be significant because it has a huge body in comparison to previous candles. Such a candle will provide a perfect base for trading candle range theory, and the range of this candle we will trade. Another important condition that must be met is a liquidity grab beyond the range of the candle that you identify. In our case, we see a clear trap below the low of that candle. You can see that here the price went beyond that, but then quickly returned within the range of the candle that we spotted. When you identified an imbalance, high momentum candle and a trap and the liquidity grab beyond its range, you can look for entries. And here you can use different strategies and techniques for trading that. I will show you two very different but very efficient techniques to use. With the first method, we will use the same time frame for entries. And after you identify the trap, you will need to strictly wait for a consolidation. You can see that after the trap below the range of this candle, the market started to coil and the market started to trade within this range. We will assume that within this range, buying volumes will accumulate. We will assume that within this range, bullish accumulation will silently occur. Your signal, your confirmation to buy the market will be a breakout and the violation of a resistance of that range. It will signify a clear buying imbalance and it will signify that the accumulation is likely over. To confirm a completion of the accumulation, we will strictly wait for a candle close above the resistance of the range. It will be a very important condition. And then after that, you can set your buy limit order on a retest of a broken resistance of the range. That will be the ideal entry for your trade. Your stop loss should lie below the lows of that consolidation, below the low of the trap, and you will need to target the level of the opening of that candle. So in our example, our take profit will be here, and I always keep that couple of pips below the level of the candle close. So here is a complete strategy to follow. In our example, we have a strong high momentum bearish candle and a clear trap below that. Then the market started a consolidation, and the plan is to wait for a completion of this consolidation and accumulation. A candle close above the resistance of that consolidation will confirm that the accumulation is over, and then the market will likely rise all the way up to the candle opening level. We'll set our buy limit order on a retest of a broken resistance. Stop loss will lie below the trap, and take profit will be just a couple of pips below the candle opening level. Waiting for the entry signal on the same time frame where you spotted a proper candle for CRT trading is a very conservative strategy. There's another more aggressive strategy based on multiple time frame analysis. The idea is that after you identified a proper candle for CRT trading and after you spotted a trap, you start analyzing a lower time frame. And if we spotted the candle on a 4-hour time frame, we'll use an hourly time frame for entry confirmation. On an hourly time frame, we will need to do a classic structure mapping, and we will simply look for a change of character. You can see that here we got a strong bearish impulse. The market set a lower high here and then dropped lower, setting a new lower low. Then you can see that the market started to recover. We set a lower high right here, and then we got another attempt to drop lower. But instead of setting a new lower low, lower close, the market set a higher low. And then we got a strong bullish movement. With the strong bullish movement, we got a very important event that is called change of character. You can see that the level of the last lower high was violated right here, and it confirmed the violation of this minor bearish trend. With this change of character, the minor bearish trend was violated, and that will be our signal. This bullish change of character will be our signal that the market will likely move up now. So if on a 4-hour time frame we still don't have a confirmation to open the trade, here we already have a signal to buy. We already see a clear sign of strength of the buyers. So we can open our long position now and we can already buy, expecting a bullish continuation. Our stop loss again will strictly lie below the lows of the trap. It will be a very important condition. And with take profit, we will stick to the same rules. Yes, our take profit will be based on the candle opening level on a 4-hour time frame, and we will simply move that couple of pips below that. So here will be our active trade. So here's a complete plan. After we spotted the proper candle and the trap on a 4-hour time frame, we start analyzing an hourly time frame and we do structure mapping. With structure mapping, you will need to execute a trend analysis, and then your signal will be a change of character in that trend. In our example, we have a clear bearish trend and our signal to buy is a bullish change of character, is the violation of the level of the last lower high. Then basically you set your buy limit order on a retest of a broken level of the last lower high. You set your stop loss below the lows of the trap, and your take profit is based on the 4-hour candle opening level. The core of these two trading strategies is the same. We use the same rules for the identification of a proper candle. The main difference in these two strategies is how we look for an entry signal. The first strategy uses the same time frame for an entry signal, while the second strategy uses multiple time frame analysis. Multiple time frame analysis will provide more aggressive and a bit riskier confirmation, but at the same time it will provide an earlier entry, and you will most likely have a better reward to risk ratio spotting a confirmation on an hourly time frame. While a 4-hour time frame confirmation will be safer, but that there will be a lower probability that the market will let you be involved in such a trade. So it is your choice. Let me know in the comment section what strategy do you prefer. Personally, I prefer multiple time frame analysis strategy because I would like a better reward to risk ratio and an earlier confirmation. But one time frame entry strategy is very decent too. And look how perfectly the market reached the target level after we entered the trade. First, smart money were trapping the buyers, and for that reason, by the way, we got such a safe stop loss. With this trap, they grabbed the liquidity again, and then you can see that we got a very sharp and strong bullish movement. Let me know traders in the comment section if you have any questions. Don't miss my next free trading signal. Subscribe to my free Telegram channel now, the link in the description below. Also traders, please watch my other videos.